Holy smokers, folks, get ready to get your flapjacks flipped in this one here today. I have some unbelievable data I have to show you. They're preparing to go all in this market. I need to show you what's going on, where this market's headed from here, those sorts of things, okay? From there, we're going to go ahead and react to this video. Tom Lee, the most hated V-shaped rally by institutional investors. That's going to be an interesting one to react to. Dan Ives, we're at the beginning of a golden age for tech. Looking forward to reacting to that one. Look at Dan Ives' outfit. Only Dan Ives could rock something like that. Holy smokers, that ain't no dang jokers. No sign of bear market on the horizon. Edward Jones, looking forward to reacting to that one in this one here today. And then last one up here, the market will continue to grind higher over the near term, says Morgan Stanley. So I'm definitely looking forward to reacting to that one. 4th of July here today. Appreciate everybody joining me. All I need from you guys, one thing only. Smash that thumbs up button. I appreciate y'all joining me. And that's it. If you want to subscribe to the channel, you can certainly subscribe. We're nearly 100,000 subscribers deep. We're very, very close to 100,000 subscribers. So I appreciate y'all for being here. And look at this. When's the last time I recorded an outdoor video? When is the last time I did an outdoor video? It's been forever. But it's 4th of July today. By the way, happy 4th of July for those celebrating today. 4th of July. And it's like 87 degrees here in Vegas. I think the high today is going to be like 94, 95 degrees here in Summerlin. Unbelievable. I'm like, I'm going to go record a video outside. I got family in town. I'm having to heat the pool. Heat the pool? 4th of July in Vegas? Like that was, like usually that is not a thing you have to do. But it's a weird year, so moral of the story is a little cooler than expected. Also, I want to let you guys know there's a few hours left here. Looks like about 14 hours as of recording this. I'm sure when you guys watch this, there's going to be even less time left. But there is a little time left for the 1000X stocks sale. So if you want to get access to that before the deal ends, check out the pinned comment down there. Click on that and join us on in there. And additionally, you will be sent your Steel membership card in the mail to your house once you join us in there. So yeah, a few hours left on that one. Looks like a ton of you guys have been able to take advantage of that, and so I'm very happy that, you know, a lot of you guys are definitely leveling up and taking things more serious. Okay, already, you know, a lot of you guys have had success, and now you're like, okay, now how do I sustain the success? How do I take this more serious? So glad to see that you guys, you know, taking things up to another level. We put out this investor report each week to our private stock group members, and we go through a ton of different data. Very important things whenever we do this investor report, essentially, which, like, we go through a ton of different things. But one of those things is this. And oh my gosh, have we had a switch up here. Look at this. This week, the latest AI investor sentiment number. So this basically, are investors bullish, neutral, or bearish on the market for the next 6 months? Like, it's a great kind of tell on how people are feeling out there as far as investors go. Look at this. We just had a major flip. Now, as of this latest week, 45% of investors are bullish on the market, folks, for the next 6 months. That's a huge flip. And now we've gone to a point where we're significantly over the historical average for bullishness. The historical average for bullishness is 37.5%, and we're at 45%. That's significant. Significant. Additionally, bearishness is still actually higher than where your historical average is, but neutral is like way down. So basically we have a market now at this point in time where people are either bullish or they're bearish, but not a lot of people kind of in that middle ground of that neutral area, right? Which means essentially we could be in a situation where Wall Street's preparing to go all in over this next month or two. And what I'm seeing here is a situation where if earnings come out are good and the guidance is good, I think Wall Street's ready to go all in this market now at this point in time. And you'll see that bearishness go way under the historical average, and you'll see that bullishness push to like 50% plus, especially if you get good guidance from all the companies that matter. What are the companies that matter? All those Mag 7 type of companies, and the companies right underneath those companies, like the AMDs and the others, right? Get ready. They're getting ready to go all in this market. And remember, they were not investing into this market in April. They started to nibble a little bit in May. They started to nibble more in June. And now they're preparing to go all in this market. And look at what I just showed you guys, right? We're going to react to a bunch of videos. But look at these videos. Obviously, Tom Lee's always bullish, right? But look at Dan Ives. We're just at the beginning age of golden age of tech. Look at this one. No signs of bear market on the horizon, Edward Jones, right? The market will continue to grind higher over the near term, Morgan Stanley. That shows you also the sentiment, right? And I'm looking forward to reacting to those videos in this one here today, but that shows you the sentiment. of how people are really feeling in this market, how Wall Streeters are feeling in this market, right? They're starting to get really, really bullish at this point in time, right? Which definitely bodes well for the stock market in the short term. Now, with that being said here, right, you got to understand, to really make a lot of money in the stock market, you've got to be buying stocks when the sentiment's bad. I'm showing you the public account right now, $3.6 million plus portfolio of mine. If I think about every single one of these stocks, I basically added every single one of these stocks when the sentiment was really bad. Meta. When did I add a lot of my Meta shares? A lot of those Meta shares came in 2022. The sentiment was horrible. Complete dumpster fire. AMD. I had a lot of AMD shares over the past, 6 to 9 months. AMD sentiment was horrible until very, very recently. All of a sudden, the last, I would say, 2 months, AMD sentiment has switched massively, and people are starting to realize what I've been talking about, right? But before that, AMD sentiment was bad. Amazon was kind of a late 2022, early 2023 buy when sentiment was very negative. PayPal was like, that stock had crashed from like 300 down to like 50 something dollars, right? My cost base on that one, 62.48. Sentiment was so washed out. Palantir, sentiment was awful. Palantir, oh my gosh, my cost base is 737. What is it, an airplane? Is it a Boeing? It might as well be, right? The only difference is it didn't crash. Palantir, unbelievable, right? How bad the sentiment was. Cheesecake had horrible sentiment. Nike, could you talk about worse sentiment than when I've been buying Nike recently? Celsius, awful sentiment when I was buying it. EL, the more, what I just figured out about myself and my investing process? My key to the success. I just figured it out. It just hit me while I'm recording this. I buy companies that actually have great long-term futures when the sentiment's horrible. like literally, that's what I do. And if you look at that every single time, it's unbelievable, really. And even I'm buying a lot of Adobe shares right now. Adobe sentiment's horrible right now. Stock's trading at a joke forward P. People are like all scared about this and that. Google, same exact situation. I've been buying Google here recently. Sentiment's horrible in regards to Google, worried about OpenAI and all these other, services and whatnot. That's the trick. You gotta buy stocks when the sentiment's horrible. And then you just make lots of freaking money. Unbelievable, really, right? But you gotta get the stocks right. Like, obviously, there's a lot of other stocks that sentiment horrible, and, they don't come around in those sorts of things. But, man, when you get this game right, woo-wee, it could be a lot of fun. A lot of fun. And just wait to AMD. If AMD comes out with a banger guidance like I think they're gonna come out with, you're gonna see AMD go 175 to 200 quick. So now, additionally with the sentiment, this shows you how much things have really switched now at this point in time. As far as people being bullish on the market, we got all the way down to only 19% of investors were bullish on the market the next 6 months in May, right? What a horrible perspective, because they should have been very bullish at that particular time. And you look at kind of these look at April 2nd, 21.8% bullish. That's it. Look at April 23rd, 21.9%. Look at April 30th week, 20.9% bullish. And look at how big these bearish numbers were, 59%, 61%. If you're wondering why the stock market just keeps rallying and rallying, it's because all the big money sold out at the end of February, into March, into April, stayed out, and now they're just, everybody that wanted to sell sold. Like, literally, everybody that wanted to sell sold during that particular, 60 trading days or so, right? And now we're in a situation where slowly but surely people are buying in and people aren't selling. I'm not interested in selling my AMD shares. Sorry, got to bid up for those. Neither are other people, because they understand AMD's likely on the path to 200 plus. They're like, no, we're not selling AMD. But you got more and more people saying, I want to buy AMD. And when I say people, I'm talking Wall Streeters, big money. They're saying, I need an AMD. I'm hearing more and more talk and excitement. I just was watching Fast Money a couple days ago, and I believe it was Tim Seymour talking about very bullish on AMD. And it's just like you're starting to see the Wall Streeters, the big money, start to get excited about these stocks. And a lot of us are like, I'm not selling. I don't care. AMD go 150. I'm not selling AMD. AMD go 200. I'm not selling AMD. I'm holding on to my shares. And a lot of people are like that, right? Think I'm interested in selling Amazon? My 1,111 shares of Amazon? No, thank you. You can bid up for those, right? And so they got to bid up. Next thing you know, they're paying 224, 227, 230, 240, 250. I think the only one that's been By the way, Amazon right now, let me be clear about where Amazon stock price would be right now if it wasn't for a certain thing. Right now, Amazon stock would be $275. But Bezos has been putting a lot of selling pressure on the stock. I mean, a lot of selling pressure on the stock. So it's actually kept Amazon stock price much lower, artificially, at least in my opinion, than it would be if it wasn't for Jeff Bezos putting a lot of selling pressure on the stock. Now you might say, well, does Jeff Bezos know something? No, like, he's just trying to diversify funds. He likes to invest in other things. He likes to have elaborate weddings in Italy, man. You know, none of that stuff is cheap. Tom Lee.
Good to see you.
Great to see you.
So we have this rally that's now extending probably beyond what most were positioned for, but it started in a moment of peak uncertainty.
Yes.
And even when we were in peak uncertainty, a lot of us were saying that's kind of usually forward-looking bullish. But are we now getting to a point where we have finally feasted on all of the uncertainty and now we have a lot of these blanks being filled in?
I don't. I think that it is appropriate that we are making new highs because the fundamental and the visibility is better now than it was in February at the old highs. And I think there's three levers that are going to get pulled. One we know is that the Fed didn't unleash liquidity at the April lows. So we have a Fed that's been on hold and tight. But if the information and the data comes in dovish, that's 12 to 24 months of Fed liquidity and dovishness. That hasn't happened yet. The second is that I think that there is a false argument. People are saying the multiples are stretched. The PE should be expanding because we've now had 5 stress tests that companies survived. They survived COVID, they survived the bullwhip effect, they survived the inflation surge, they survived the Fed fastest hikes, and now they survived Armageddon. If you don't have 5 more episodes...
By the way, look at Tom Lee's hair. Impressive. I don't know if it's as impressive as my hair, but, I mean, we might be the hair bros, you know?
Will be higher 2 years from now. And the third is that I agree with anybody who says that, look, we've kind of reshaped some of the economic flows around tariffs, but that's an upside story because if it plays out better, that's an earnings surprise. So you have 3 levers that tell us that 6,200 is the market beginning to recognize we're in a better position, while $7 trillion cash is on the sidelines. And I can tell you, our clients, institutional clients, remain very skeptical. This is the most hated V-shaped rally.
I grant that given the strength of the rally, investor sentiment pretty much across the board has lagged. It's not as bullish as you would normally expect. The $7 trillion in money market.
Yeah, and he makes a really important point there that I think everybody watching this should really understand this on a high level, right? Think about, for just a moment, think about what companies have had to go through the past 5 years, right? From Rona to super high inflation, right? To the Fed raising rates at the fastest clip we've seen in modern times, right? To, different presidents, to all this stuff that's going on, right? And then the tariff stuff. They've had to go through so much. And yet, what does it all end up at in the end? Companies, revenues are higher than ever, profits are higher than ever, and for great companies, their margins are higher than ever, right? So they've went through all of this drama, and at the end of the day, they emerge stronger than ever before. Bigger buybacks than ever, better balance sheets than ever, better income statements, cash flows for the strongest of the strong companies, right? It's unbelievable. And it goes to show you that you've got to stay invested in the greatest companies in the world because they get through to the other side. Whatever's thrown at them, they find a way to make it through the other side, right? That's what great companies do. And, it's insane. It's insane. The company that really just is coming to my mind right now as I think about this it's Meta. I just think about Meta and I think about everything that's transpired over the years, and I just think about how much stronger that company is today than they were prior to Rona, right? And I could think about that with Nvidia as well. I think about how much stronger Nvidia is today than they were prior to Rona. That's what great companies do. Amazon, so much stronger today than they were prior to Rona. My gosh, that's what great companies do.
Oh, I mean, to me, it's a non sequitur. It always goes up. Unless you're at the end of an awful bear market, the money doesn't come out of money market funds. And then right now, as a percentage of total market cap, the S&P is $60 trillion, or the U.S. market is. But it's what are we talking about?
Well, there's a couple of things to keep in mind. One, in fact, money market balances have declined. They only started to rise really in 2022.
Right, they had a stutter step and then they went up.
if you look at margin debt, NYSE margin debt, the dollar amount absolute is still below where it was in October 2021. So you have like 4 years, it's 4 years and you're still not even higher in margin debt. And third, it really doesn't take, you don't need 60 trillion to come into the stock market to have it rise 10%. You probably need 200 billion. And I think there's a lot of high net worth money. I know there's a lot of our institutional long short macro that is shorting this rally. The long only managers are defensively positioned. They don't believe in a cyclical long. But look, if rates come down and the Fed starts easing, it's going to force people into a cyclical tilt.
In terms of the jobs number today and how it bears on all of those factors, whether it's timing of the Fed, whether it's, the underlying resilience of the private sector, which maybe is still kind of in watch and see mode, how does that bear out?
Well, today would have been a day where if it was weak, then the Fed has to change its calculus, but the job market's good. So now the waiting game is, how much will inflation surge over the summer? Inflation expectations are actually coming down. So now all that we're waiting for is let it get through this CPI hump. I do think it means that once you get into September, we should really think about cuts coming. And that's what I would focus on more as an investor, that's a cutting cycle. The Fed won't just do one cut. They're going to continue cutting. ECB and the U.S., 200 basis point different in monetary policy rates. But if you take CPI year over year ex housing, which is how Europe calculates it, we're both at 1.9% today.
So this is what scares me about where the stock market's headed this fall, right? And I understand we're in the summer right now, so we're still quite away from the fall. But the setup scares me here. And here's why. We're looking at a situation where I think earnings are going to come in very good, and I think guidance is going to be very good for companies. That's going to make Wall Street really bullish when they hear those guidances from, like I said, a lot of the companies that matter the most, right? Then on top of that, I think on the conference calls, you're going to hear CEOs be much more confident this quarter than they were last quarter. That's going to make Wall Street feel pretty good about like, oh, these CEOs got more of a handle on their business now at this point in time, right? Rate cuts are likely coming. Next cut cycle likely starts in September, right? High probability of that. I think we'll have enough economic kind of weakness in the macroeconomic landscape. You won't really see it from a lot of these big company earnings, but from the macroeconomic side, I think you'll see enough weakness to make the Fed say we're cutting in September, and inflation will be not enough of a problem to make them say, we feel comfortable cutting. So you're going to have essentially a situation where over this next 30 to 60 trading days, I think Wall Street's going to feel a lot better about the market than they're already feeling, right? Remember, they just kind of flipped over the bullish side. Like, that's just happened. That usually doesn't just, they flip and then it goes right back bearish. Usually they get bulled up and then they get more bullish and more bullish and more bullish, and that can usually last, sometimes several months, essentially, right? So I'm worried that that's going to happen. You're going to see more margin debt creep into the market as people get more and more excited, hyped, about where the market's headed. People usually get greedy. They've made a lot of money. They start saying, I want to make even more money. I wouldn't be surprised at all if you see margin debt increase substantially over the next, let's call it 30 to 60 trading days here. And that all kind of scares me for the fall time, because I worry that the market's going to run too much over this next 30 to 60 days. And then we're going to be in a situation where something's going to happen this fall. I haven't figured out what yet. Something's going to happen, and that sends the market down big. In the fall time, essentially, into early winter. So that I'm a little concerned with, but I've got to find the catalyst that sends us there. And I haven't found that yet. Time's got to tell. Like, we still got to let the whole situation play out. But if you're wondering, like, could this market get insane bullish? It could go insane bullish over this next 30 to 60 trading days if what I laid out ends up happening here. Alrighty, Dan Eyes, we're just beginning of the golden age for tech.
The viewers and listeners know it too. The question becomes, after a run like we've seen since the Liberation Day lows, what can we expect from technology? Has it already been drawn forward?
I don't think so. I think we're just beginning this golden age for tech. And the reason I think tech stocks are up 10 to 15% in the second half of the year, because the second, third, fourth derivatives of AI, they're just starting to play out. When you look across software, you look across semis, you look across the consumer port, and to me, that's really the focus here, is that as the AI revolution plays out, that's how I think you get to Nasdaq 22K, 23K.
If it's that way, we know.
No, you might say, let's say market runs heavy this next 30 to 60 trading days. let's just say 60 trading days. Market runs insanely heavy next 60 trading days. It's just goes insane bullish, right? Just insane optimism. What am I going to do? I will hedge. I will add put options on certain positions, certain stocks. Now, when would I do that? I would probably do that September. Potentially October too. Either September or October. I'll likely end up doing that. Potentially even November. Let's just call it September to November. Now those, as far as expiration, I'll probably do summer 2026 expiration. I want some time to play with there. Because who knows, maybe the market just runs heavy all the way into Christmas, right? And then we get to next year and all of a sudden, all a bunch of worries come in, everybody starts getting really concerned, and then people start freaking out, and they're like, we've gone too crazy with margin, we've gone too crazy with all this optimism, we got bad stuff coming. So I want some time to play with there. Now let's say I put on a hedge in September, October, right? And then let's say market all of a sudden tanks in the fall, right? Like we talked about, could happen if, certain dynamics happen, you get a catalyst to tank the market in the fall. I'll cash that in the wintertime then. I won't hold that all the way till expiration. If I make a ton of money on those put options then at that point in time, right, very early on in the hedge, let's call it in the first 2 months, I'm out. Peace. Like I'm cashing and I'm gone. And so that's kind of a game plan as far as all that goes, but we'll see. We'll cross that bridge when we get to that bridge.
Through history, it's not always a straight line, and even hasn't been since the recoveries of the great financial crisis back in 08 and 09. What kind of risk downside can investors expect, even if the medium to longer term march is from the lower left to the upper right?
Yeah, me and you've talked about this before for a long time. It's like, those are the opportunities. Like you go back to, let's say next week, July 9th, what happens with some of the trade deals? You look at Fed, you look at geopolitical, but I view those as the opportunities. I mean, my whole career, those are the opportunities if you think the fundamental stories are playing out. And I think when it comes to tech, this is just starting. I think it's a 3-year tech bull market still ahead of us. What I view as AI, $2 trillion of spend in the next 3 years.
What about valuations? You can't argue with the fact that there are certain places in the market right now, especially in technology, that have elevated valuations, enough so where people are drawing certain comparisons to other frothy times in recent market history, just in the last couple of decades. Yeah. How do you respond to that?
Look, at some of the covered tech stocks in late 90s to today, I view as apples and oranges, because this is the biggest tech trend we've seen in the last 40, 50 years. And I always focus, if you just focus on valuations, you missed every transformational tech stock the last 20 years. I think you have to look at the next 3-5 years what growth looks like. And I think, to me, tech is actually undervalued relative to where I see this. And that's why I think a lot of the bears, when they're in hibernation in those caves, they can't see AI in the spreadsheets. I think that's why we're so bullish, especially across not just software, cybersecurity, and across the rest of the ecosystem.
Okay, so if
in this whole so scared of valuations, what are the biggest stocks that matter the most to the stock market, and do we have valuation problems with those companies? Well, let's type in Apple here, let's type in Mr. Softy, Microsoft, okay, and then we have Nvidia, and let's hit the compare button, and what do we see? We see Apple at a forward P of 29, Microsoft at a 34, Nvidia at a 41, right? Now, what type of growth rates are expected for these companies? Apple's expected to have 7%. Revenue growth next year, Apple's seen as one of the strongest companies in the market. So you're going to pay a premium considering Apple's seen as one of the strongest companies in the market, right? With 7% revenue growth on a 29 forward P, not crazy. No, not a steal deal, but not crazy. I can tell you that. Definitely not like some sky-high tech bubble valuation. Microsoft, 34 forward P, double-digit earnings per share growth expected next year. Additionally, double-digit revenue growth for a company that's one of the most stable, predictable companies in the entire world, one of the strongest companies in the entire world. 34 is not crazy. Nvidia's 41. You say, oh boy, okay, now we're pushing high. That's like double the valuation of stocks on average in the market for a forward P, right? 41, woo-wee. Well, next year, expected earnings per share growth, based upon analyst expectations here, 44% for Nvidia, 32% revenue growth. So a 41 forward P is not high. So we just knocked out 3 big dogs there, and we found out none of them are like some crazy valuation that you can't like justify. What about Amazon, Meta, Google? 3 next big dogs, right? Forward P on Google's 18 with next year expected earnings per share growth, let's call it 9 to 10% range, and then revenue growth of, like slight double digits, right? 18 forward P for one of the strongest companies in the world, income statement, balance sheet, cash flow, with let's call it super high single digit or low double digit growth. That doesn't look expensive. Meta's at a 27. So, ooh, okay, Meta's a little above where, stocks on average trade at, forward P wise. Well, Meta's got double digit expected revenue growth, earnings per share growth. Doesn't look high at a 27 when you got double digits, right? Amazon, 35. Amazon's expected to have double digit revenue growth and potentially 20% plus earnings per share growth next year. So, the moral of the story is here, you just can't really compare this to like the tech bubble, because you look at these companies' valuations and the growth rates and you're like, that's fair. Like all those stocks I just went through, that's fair. The one you can make a strong argument, I think there's 2 you can make a strong argument that are actually very significantly undervalued, and that would be Google and Meta, right? I think those are 2 you can make a really strong argument are not only not overvalued, but they're actually significantly undervalued.
To press you, and we are going to right now, because you cover all kinds of different tech stocks. You pinpoint, I'm asking you to pinpoint where you think among your coverage universe the real outperformance will be. Is it tech hardware? Is it like NVIDIA? Or is it in software? Is it just mega cap tech in general? Comm services, media? Sure. What exactly does that mean?
Look, I think Mag 7's up 20%. Okay, second half. But to me, it's really software, cybersecurity. I mean, that to me is that's where you're going to see the AI revolution play out. The use cases, Palantir, what you're seeing in terms of MongoDB, Snowflake. You look in terms of our price target increase, Datadog. You look at cybersecurity, CrowdStrike, Zscaler, or CyberArk. I mean, to me, I think cybersecurity could actually be one of the biggest outperformers in all of tech. And that's why I sit here today to get the popcorn out moment. Because when you look into the second half of the year, and we're going to have some white knuckle moments, I think this is a bull time for tech.
Let's go ahead, let's take a peek at Palantir and Datadog here and kind of see where those ones are trading at. So we got PLTR, and we're going to go Datadog. Don't you just love this about 1000X? Just be able to type in ticker symbols and it pulls up all the metrics that you'd want as a long-term investor, like literally in a second. Like boom, 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 and it lays it out exactly the way you want it. Like, whoo-wee, what a banger. Now, here's the deal with stocks like Palantir and Datadog. This is where you start to get into a strong debate on if you have some bubbles in some stocks, right? And as a Palantir shareholder, you can say, you can definitely make a strong argument. Palantir's trading at forward P in the 200s, mid 200s right now, right? With next year expected earnings per share growth in the 30s, revenue growth, let's call it mid 20s next year. Now, there's a potential they grow in the 30s. I think that's more realistic, in my opinion, and I think analysts are a little too bearish in regards to revenue growth. But even if you say they're going to grow revenue 30, 35% next year, you're still at forward P in the 200s, which is still insanely high, right? You look at something like Datadog, forward P of 113. Next year, expected earnings per share growth, based upon analyst expectations here, of about 55%, and revenue growth is called about 20%. So definitely rich for Datadog. You can make an argument that it's overvalued, but those, you got to understand, when companies have big dog growth rates, right? People are willing to pay some crazy prices for it. I've seen it time and time again when it comes to strong growth stocks. And at the end of the day, Palantir's been growing revenue, right around 40% here recently, right? Look at Datadog. Datadog, trailing 12-month revenue growth, 25%ish. Like, people are going to pay up. They're going to pay some really big prices for stocks like that. Like I said, you can make an argument that they're overvalued, though. All right, next one here. No sign of a bear market on the horizon.
We're sitting near all-time highs, so things are pretty good. But would you say they're irrationally good right now?
Yeah, look, I think markets went through a period of a near 20% correction. So keep that in mind. So we're recovering from that. In fact, on a year-to-date basis, the S&P is up only 4 to 5%. So I wouldn't say yet we're experiencing any period of irrational exuberance. But we do know when momentum begins, it tends to continue, and markets can overshoot to the upside and can also overshoot to the downside on the reverse side.
Oh, yeah.
Now, what we'd say more broadly is, look, we've experienced one pretty severe correction.
What you just said there is 100%. That happens all the time in the stock market. shoots too far to the downside, which is what happened in April, right? And then it shoots too high to the upside, and we go insane bullish. Market goes all in over the next 60 trading days. We'll probably get overstretched in this market, right? So that's the stock market for you, and then it has to correct the other way, and a lot of times it takes that correction too far.
Ready this year, but in a year,
it never gets it right. That's the thing you gotta understand about the stock market. It never gets it right, and the reason it never gets it right is because humans are making decisions and machines are making decisions out there. And machines, when it comes to things like investing, they just get it wrong continuously. Investing is such an art. At the end of the day, investing is a good amount of science, but it's also a huge amount of investing is art. And so, in the machines, they just can't do art like that. They just can't do it, man. And so they could try their hardest, but they just can't do it. And then you got humans, and humans, they can do art, but they can be very irrational. And so that's why the market can get very oversold, and it can get into a situation where it's way overbought. Happens all the time.
Elevated uncertainty. We know 2 to 3 corrections are the norm. So could we expect more volatility in the months ahead, especially as we're digesting more trade and tariff headlines, a tax bill, potentially softer economic growth? Absolutely. We think there is a possibility of that, but we don't yet see any sign of a complete reversal or bear market or bubble burst on the horizon.
How much does time matter? I mean, this time now at the beginning of July, the beginning of the second quarter, we got every institution piling into stocks at the end of the last quarter. So can people wait now and see, like the Fed, for what's going to happen?
Yeah, I think investors and the Fed are in many cases, a wait and see mode. Everyone is waiting to see where the tariff rates end up across all our trading partners. And of course, what the impact is on inflation and the labor market. Thus far, pretty benign impact. And so if that continues, we continue to see the Fed on pace to cut rates. Now, whether that happens very gradually or more aggressively, that remains to be seen.
So what the Fed will likely do is, as long as the macroeconomic environment is relatively stable over the next few months, they'll start a cut in September, but they'll do 25. They don't likely want to go 50 right off the bat. You usually don't want to go 50 off the bat unless you feel like the economy is in real danger. I think if they went 50 right off the bat, it would probably freak the market out. The market would be like, what? Why are they cutting 50 right now? Like, why not start with a 25 cut? So the higher probability is they start in September and they do a 25 cut to kind of get the party started. And then if things go the way they want them to go, they'll probably continue to do 25s. If, let's say, the market tanks in the fall and into the winter, right? And let's say inflation remains not a problem in the fall time, and let's say, economic data doesn't look great, then you could be talking about 50 cuts, right? But we'll see.
Appreciate you coming on to weigh in here. I mean, it's certainly true, as the Treasury Secretary says, we've had this very rapid and complete recovery from that tariff scare. Does it tell you that the economy has sidestepped whatever impact we thought we were going to get from tariffs?
No, I don't think we know that yet. I think, most folks recognize that some of the tariff policy resolution is still yet in front of us. We don't have deals from the vast majority of countries. We know that the July 9th deadline is approaching, and it's very likely that we're going to continue to kick the can down the road for a while to see what we can negotiate. But I think it remains to be seen, which is one of the reasons that the Fed has been on hold. But the market, I do think, has moved on. And is assuming that whatever impacts we get from tariffs are going to be, quote unquote, digestible. And so I think that the market narrative is now really focused on, the next 6 to 12 months where, there are great hopes that we are going to get some stimulus, particularly on the, corporate tax side of things from this tax bill that will help earnings over the next 6 to 12 months, that will stimulate capital spending and productivity. So I think that's where the market's brain is at the minute.
Sure. And do you take issue with it? I guess the question at any moment is, has a gap opened up between the market story that it's locked into and what you think the likely outcomes are?
I think in the very short term, this is a market that wants to go up. I mean, you just look at the behavior of the tape, you look at the momentum in the market, you look at the leadership of the market. It's the same old Mag 7 tech oriented leadership, and positioning remains only average. We're not really overbought yet on technical factors like sentiment and positioning. So we think that this is a market that's going to continue to grind higher, throughout the next, 6-8 weeks towards 6,500, which is our full year price target. I think once we get past, the debt ceiling and past the actual tax bill, I think it may be a sell the news event. Where folks start realizing that an awful lot of good news now has been discounted.
She's kind of talking a little bit about what I was talking about, right?
In this move. And that what we're going to be struggling for as we get into 2026 is where are the upside surprises going to come from? Because that's really what powers market.
And so what stock market index in what particular stocks are set to benefit potentially the most over this next 60 days, assuming we get this all-in market over this next 60 trading days, where Wall Street just is throwing the chips on the table, right? And you're just getting insane buying pressure. Margin picks up to another extent. The bullishness picks up, and the bearishness just completely drops out in the market, and you go under historical averages for bearishness. In this sort of environment, the index that will do the best and the type of stocks that will do the best are the small caps, the stocks no one's wanted a piece of. Because at the end of the day, the more you get confirmation that the Fed's likely going to start their next lowering cycle, that treasuries are headed down, interest rate sensitive small caps, people start saying, I want to get into those again. If you start feeling better about the market, the economy, the consumer, people say, I want to go to small caps. And so you can see small caps outperform, and you're already seeing it, by the way. You're like, look at the data recently. Like, let's go ahead and pull it up here. I think this would be very important. And just a very, very recent in regards to checking the Russell 2000 IWM versus, let's say, the S&P 500 and versus the Nasdaq. So let's go IWM here, okay? And then we're going to pull up the QQQ here as well, okay? So let's go ahead and take a peekaboo. So obviously, look at how much the IWM has underperformed S&P 500 and the Qs over time, and especially over this past 5 years. Look at that. I mean, look at this. If you go to like February of 21 area, right? Basically, the IWM is 1% lower than it was back in February 2021. Meanwhile, the S&P 500 is 60% higher, and the Qs are 68% higher since then. Unbelievable. But let's check out the past 5 trading days. Look at this. Qs are up 1.5%, S&P 500 is up 2%, and the IWM's up 3.5%. If you get people feeling like treasuries are headed down, Fed's going to start their next lower cycle, inflation's not really an issue, and the economy's not a disaster, it's just like, is what it is, you're going to see the IWM and small caps perform tremendous. And so do keep that in mind, okay? Alrighty, guys, so 1000X sale, we've got 13 hours left on this baby. Pin comment down there, click on that. If you're ready to get your membership, we have 2 different options. One's $49 a month, that's usually $99 a month. And we have one option that's $1,500 for 3 years access, that's usually $3K. Now, listen, where I want you guys to start is how to decode a balance sheet, how to decode an income statement, how to decode a cash flow. You click on these lessons, takes you all in detail on exactly how these things work, why it all matters, okay? How to perform SWOT analysis, strong moat versus weak moat, how to value a dividend stock, how to value a growth stock, dividend investing 101, portfolio management 101, infinite money loop, basic option strategies, advanced option strategies. I want you to start there first, folks, okay? Additionally, check out the metrics portion. There's going to be a lot of stuff on here, especially if you're in your first year or two, that you might not know. Like, what is a, I don't know, what is a 2-year stack expected earnings per share growth, right? I got the whole definition here, exactly how it works, how to calculate it, things like that, right? What does it mean to have current quarter revenue growth versus previous year? Boom, I got it all laid out for you. So read all that as well. And then you can start working with the search tool and typing in whatever ticker symbol you want, looking at all these numbers, compare feature and figuring out if you're getting a great deal on stock, if you're getting ripped off on a stock, right? You can then take it to the earnings calls. We now have our AI transcripts in here as well. So you can type like NVIDIA, I want to see NVIDIA's latest conference call AI transcript. And boom, look at that. In a matter of, what was that, a second? Now it gave me a whole summary of NVIDIA's latest conference call here and what's going on there. We have our SEC filings, we have our projections, our intermediate and advanced, so you can run numbers, and this is how you really figure out, are you getting a great deal on a stock, are you getting ripped off on a stock, what's your expected, you know, compounding annual growth rate, all based upon your assumptions of what a fair PE ratio is, what the company should do for net income, revenue growth, all that good stuff. We have our advanced projections as well, and you can also save your files. So when you want to go crazy mode with it, this is more, you know, if you're more of an advanced investor, you're going to really enjoy that portion there. And then we have our financials. We also have our charts feature, which is just beautiful. I love this feature so much, man. I love this feature. I mean, you know, let's go to NVIDIA here. And we also have the logo now. Look at that, boom, populates the logo. And you can see, okay, what's going on with NVIDIA's business model, where are the numbers trending here, where is it expected to go. This is where NVIDIA's at right now. This is where, based upon analyst expectations of where NVIDIA's revenue is expected to go, right? This is kind of where their margins have gone recently. This is where their earnings per share has been trending on a trailing 12-month basis, and where it's expected to trend. Pretty bullish for NVIDIA, huh? Free cash flow, that's what the trend has been there. Operating cash flow, this is what, my gosh, your operating cash flow is ridiculous. Operating income, I can't even look at NVIDIA's charts feature here, man. It just makes me too bullish. I'm like, holy smokes. So anyways, guys, a few hours left to take advantage of that. Pin comment down there. Enjoy that. Take your investing game up to a much higher level. And once again, you will receive your 1000X Steel membership card in the mail when you join us in there. Much love and have a great day.